Picture this. It's Monday morning. Two traders side by side, staring at the exact same chart. The setup is textbook. Clean breakout, volume building, all signals lined up. The first trader's heart is pounding. His palms sweat on the mouse. He's thinking about last week's losses, about rent due next month, about what happens if this trade goes wrong. He hesitates. The breakout happens without him. He chases late, takes on too much size, and the market slams right back down. The second trader? She takes a deep breath. No rush. She's seen this setup before. She's rehearsed her plan. She knows her stop. She knows her target. She clicks once, enters, and walks away from the screen to grab coffee. By the time she returns, her first scale out hits target. Same chart, same market, same opportunity. Two completely different outcomes. Now ask yourself, what made the difference? It wasn't the market. Both saw the same candles. It wasn't the strategy. Both had the same setup. It wasn't luck. It was what was happening inside their heads. This is the part of trading almost no one talks about. The YouTube videos are filled with strategies, indicators, and million-dollar setups. But very few people talk about the fact that those setups mean nothing if your mind isn't ready to execute them. In his book, Enhancing Trader Performance, Dr. Brett Steenbarger, a performance coach for professional traders, makes it crystal clear. The biggest edge you can ever develop is not on your chart. It's in your psychology. Because the truth is, when you put money on the line, you're no longer just analyzing the market. You're battling your own fear, greed, and self-doubt. And if you don't have the tools to win that battle, no amount of technical knowledge will save you. I've seen it firsthand. Traders with cutting-edge systems who can't pull the trigger when the time comes, and others with simple, even basic setups who consistently make money because they execute like clockwork. Steenbarger has spent decades studying this difference, working with traders at hedge funds, proprietary trading firms, and even complete beginners. And what he found is that successful traders aren't born fearless. They train their minds to perform under pressure. That's what this video is about. Stay with me as I walk you through exactly how to do the same. How to start thinking like a performance athlete in the trading arena. How to spot the hidden psychological traps that make you break your own rules. How to control your emotions so they don't control your account. And how to build a personal mental training plan that keeps you improving week after week. By the end of this, you won't just know more about trading psychology. You'll have a blueprint to master it. So if you've ever looked back at a trade and thought, I knew what I should have done, so why didn't I do it? Stick with me. Because what you're about to hear might be the missing link between where you are now and the trader you've been trying to become. Section 1. The real edge in trading. Most traders start the same way. They buy a few books, binge YouTube videos, and start hunting for the secret sauce, that magic indicator, that one chart pattern that supposedly prints money if you just trade it right. And it's understandable, because everything in the trading world seems to point you there. Ads for trading courses promise their proprietary strategy is the missing key. Chat rooms obsess over entries and exits, like they're treasure maps. But here's the hard truth Brett Steenbarger delivers, and it's one most traders never want to hear. There is no permanent holy grail in the markets. Why? Because the market itself is not permanent. It's alive. It changes. What worked in trending markets collapses in choppy ranges. What thrived in low volatility gets wrecked when volatility spikes. The only edge that lasts is the one between your ears. The way you think, decide, and adapt under pressure. Think of it like giving two people the exact same set of high-end tools. One builds a sturdy, beautiful house. The other builds a crooked shed that falls over in the first storm. The difference isn't the tool. It's the skill, the patience, and the decision-making of the person using them. In trading, the tools are your strategies, your charts, your indicators. But the builder is your psychology. And if that's not solid, even the best tools can create a mess. Steenbarger tells the story of two traders he worked with, Al and Mick. Both had strong strategies. Both understood risk management. Al was calm, disciplined, the kind of guy who never raised his voice. He kept his stress low, took regular breaks, and avoided overtrading. Mick was the opposite. He was intense, competitive. After a losing trade, he would immediately dig into the charts, figure out what went wrong, and get back in the game, but always with a clear plan. Now, here's where it gets interesting. If you ask most people which trader would succeed long-term, they'd probably say Al. After all, staying calm is supposed to be the golden rule of trading psychology, but that's not what happened. Mick outperformed Al by a lot. Over time, Mick became a multi-million-dollar performer, while Al plateaued. Why? Because Mick didn't just stay in control. He stayed committed to improvement. Every loss was fuel for growth. Every win was studied to see what could be repeated. He didn't just manage his emotions. He used them as a signal to push his skill forward. Meanwhile, Al's calmness, while admirable, turned into complacency. He wasn't making big mistakes, but he wasn't getting much better either. And that's the point Steenbarger hammers home. The real psychological edge isn't about being a Zen monk at your desk. It's about being engaged, hungry to learn, willing to face your weaknesses and attack them head-on. Calm without growth is complacency. Intensity without discipline is recklessness. The sweet spot is focused, constructive learning, turning every trading day into a training day. Practical takeaway: how to apply this today. So here's your challenge for the week. Every day after the market closes, review just one trade, win or lose. Ask yourself, 1, did I follow my plan? 2, what was my mental state when I entered? 3, if I broke my rules, what triggered it? 4, if I nailed the trade, how can I replicate that process? Don't just grade the trade by profit or loss. Grade it by the quality of your decisions. Because once you shift your mindset from making money to making better decisions, you'll start building the kind of edge that actually lasts. In fact, this is where a lot of traders get stuck. They understand the theory of improvement, but they don't treat trading like the performance discipline it really is. That's why in the next section, we're going to look at what happens when you stop thinking like a hobbyist and start thinking and training like an elite athlete in the world of trading. Section 2, the trader as an athlete. Close your eyes and picture this. It's the championship game. The stadium is roaring, the score is tied, and the clock is ticking down. The star player steps up and lands the winning shot. To the fans, it looks effortless. But what they don't see is the hundreds of hours of practice in empty gyms, the early mornings running sprints, the sweat and pain that went into making that moment possible. Trading is the same way. Your game time is the market open. But the results you see on your P&L, those are built long before you click buy or sell. Dr. Brett Steenbarger drives this point home. Trading is not investing. It's not a hobby. It's not a casual side hustle you do when you feel like it. It's a performance discipline. Just like a concert pianist, a professional boxer, or an Olympic swimmer, you're competing in real time against the very best in the world. And the difference between success and failure isn't just skill, it's preparation. An elite athlete's routine is broken into 3 phases. 1, preparation before the event, studying the opponent, warming up, getting into the right mental zone. 2, execution during the event, staying focused, reading the game, making quick adjustments. 3rd, review after the event, analyzing mistakes, identifying strengths, planning the next improvement. For traders, it's exactly the same. Before the market opens, you prepare. You scan setups, mark key levels, visualize scenarios. You review your playbook. You check your mental state. During market hours, you execute. You follow your plan, manage risk, and stay aware of your emotional state. After the close, you review. You look at the trades, but also at your mindset and decisions. You note what to adjust for tomorrow. Let's compare two traders on the same day. Trader 1 wakes up late, checks their phone in bed, rushes to the desk, and starts scanning Twitter for trade ideas 5 minutes before the open. They're already behind. The market moves fast, and they're making decisions on the fly without a clear plan. Trader 2 starts the day with a 20-minute review of yesterday's trades. They've already identified 3 possible setups, the key levels for each, and the risk per trade. By the time the market opens, they're just waiting for confirmation. No stress, no guessing. Who's more likely to succeed? It's not even a contest. This is why Steenbarger says you shouldn't just keep a trade log. You need a performance journal. In sports, players track their training sessions, how they felt, what they practiced, what needs work. That's how they keep improving. Your performance journal should include mental state before trading. Were you tired, distracted, anxious, or calm? Key decisions and why. What made you enter that trade? What made you exit? Emotional reactions. How did you feel after a win? After a loss? Improvement. Focus for tomorrow. What's one thing you'll do better next session? This isn't busy work. It's your training log. Over time, it becomes your personal trading manual, built from your own experiences, not someone else's. An Olympic runner doesn't just say, "I'll run faster tomorrow." They break down their stride, their breathing, their start technique. They measure every aspect. Your journal is the equivalent for trading. It lets you see exactly where your execution breaks down, where your emotions get in the way, and where your discipline slips. Here's a simple pre-market routine you can start tomorrow. Review yesterday. Look at one trade you're proud of and one you regret. Write down why, scan and mark levels, identify support, resistance, and key zones for the day. Visualize scenarios. Imagine both your best and worst trades of the day and how you'll respond. Check your state. Rate your focus and energy on a scale from 1 to 10. If you're below 7, consider reducing size. 15 minutes of preparation can save you thousands in mistakes. But even with a strong routine, there's a trap. You can prepare like a champion and still sabotage yourself if you don't truly understand what's going on in your own head while you trade. That's why next, we're going to talk about self-awareness, the skill that separates traders who think they know themselves from traders who actually do. Section 3, Building Self-Awareness. Have you ever closed a trade and then sat there thinking, why on earth did I do that? Maybe you took profits way too early, even though your plan said to hold. Or you added to a losing position, convincing yourself it would turn around, and it didn't. And the frustrating part is, you knew better. You've read the books, watched the tutorials, even practiced your setups. But in the heat of the moment, something in your brain took over and pulled you off track. That something is exactly what self-awareness reveals. Dr. Brett Steenbarger says self-awareness is the foundation of trading psychology. Without it, you can't change bad habits because you don't even see them happening in real time. Most traders think they're self-aware because they can list their strengths and weaknesses. But that's surface level. Real self-awareness is about catching your emotional and mental state as it's happening, not just realizing it after you've blown the trade. Think of a pilot flying through fog. Without instruments, they can easily get disoriented, tilting without realizing it, and end up in a dangerous dive. When you trade without self-awareness, you're flying in the same kind of fog. Your emotions distort your perception, but you can't tell until it's too late. Your self-awareness tools are your instruments. They tell you, you're tilted, you're in danger. Here's the correction you need to make. 3 practical exercises to build self-awareness. First, trade talk recording. During your trading session, narrate what you're thinking out loud and record it. Say things like, "The setup looks good, but I feel nervous about entering." Or, "I want to exit early because I'm scared it will reverse." When you listen back, you'll hear emotional patterns you didn't notice in the moment. Hesitation, overconfidence, fear of missing out. Second emotion, tracking log. Every hour, pause and rate yourself from 1 to 10 on stress level, focus level, confidence level. This takes 20 seconds, but over a week, you'll see patterns. Every time I drop below a 5 in focus, I start making sloppy trades. Or, when my confidence goes above 8, I start overtrading. 3. Pattern mapping. At the end of each week, review your journal and emotion logs. Look for repeated mistakes and ask, do I overtrade after a loss? Do I avoid good setups after a bad trade? Do I rush entries after seeing a big move? These patterns are the fingerprints of your trading psychology. Once you can see them clearly, you can design fixes for them. The goal here isn't to judge yourself, it's to observe yourself. You can't change what you refuse to acknowledge. And here's the good news. Simply becoming aware of a destructive pattern is often enough to start changing it. The next time it happens, you'll recognize it sooner and have a chance to interrupt it. Write this down and keep it near your desk. Awareness precedes change. It's simple, but it's the core of improvement. Without awareness, every mistake feels random. With awareness, every mistake becomes a teacher. But awareness alone isn't enough. You can know exactly what's going wrong and still do it anyway if your emotions are in the driver's seat. Section 4. Emotional regulation. Imagine this. You're in a winning trade. It's moving in your favor, just like you planned. Your target is still a few points away. But then, the candle hesitates. Price pulls back a little. Your heart rate spikes. Your hand hovers over the sell button. I should take it now before it disappears, you think. You bail out early. And 2 minutes later, price rockets straight to your target without you. Or flip it around. You're in a losing trade. The stop is just a few ticks away. You think, it's going to bounce. I'll just give it a little more room. Minutes later, you're down twice as much as you planned. Both situations have nothing to do with your strategy, and everything to do with your emotions taking over. Dr. Brett Steenbarger calls the market a psychological battlefield. Every tick is a little push toward one of 2 traps. Fear makes you cut winners short, avoid good setups, or freeze entirely. Greed makes you chase entries, overstay losers, and over-leverage. Frustration makes you revenge trade or abandon your rules. And here's the kicker. Emotions aren't the enemy. You can't get rid of them. The goal is not to suppress them. It's to regulate them, to keep their intensity low enough that they don't hijack your decision-making. Think of a fighter in the ring. They're getting hit. The crowd is screaming. Adrenaline is surging. An amateur starts swinging wildly and burns out in seconds. A pro breathes, keeps their guard up, and waits for the opening. Regulation is that guard. It's the ability to feel fear or greed without letting it dictate your next move. 3 core emotional regulation techniques. 1. The breathing reset. Before entering a trade, especially a big one, take 3 deep, slow breaths. Inhale for 4 seconds. Hold for 4. Exhale for 6. This physically lowers cortisol, slows your heart rate, and clears mental fog. Steenbarger found that traders who practiced breathing resets entered with more clarity and avoided knee-jerk entries. 2. The physical anchor. After a loss, don't click anything for at least 60 seconds. Stand up, stretch, walk around the room, or even step away for water. The act of physically moving interrupts the emotional momentum and prevents revenge trading. 3. The loss reframe. Instead of saying, I'm a bad trader, say, I just paid tuition for a valuable lesson. What did I learn? This simple reframe removes the shame from losing and shifts your brain into problem-solving mode instead of self-sabotage mode. Practical drill. Emotion. Checkpoints. Here's a drill you can start tomorrow. Set a timer to go off every 30 to 45 minutes during your trading session. When it rings, pause and write down your current emotional state in one word: calm, anxious, frustrated, excited. Rate it on a scale from 1 to 10 in intensity. If it's above a 6, take a 1-minute breathing reset before making your next trading decision. Over time, you'll train your brain to notice when emotions are rising, before they take control. Here's what most traders don't realize. You'll never outgrow emotions. The pros feel them just as much as beginners do. The difference is, pros have tools ready to regulate them in real time. Write this somewhere visible on your desk. Feel the emotion, follow the plan. It's a reminder that you don't have to be emotionless. You just have to act according to your plan, not your impulses. Now, here's the next step. Regulating your emotions is great, but it's not enough on its own. To truly improve, you need to deliberately train the skills that will make you a better trader over time. Section 5. The role of deliberate practice. Here's a harsh truth. You can trade for 10 years and still have only 1 year of experience repeated 10 times. How? By showing up every day, doing the same thing the same way, and never intentionally improving your skills. Brett Steenbarger warns that the market doesn't reward time served. It rewards skill earned. And skill comes from one thing: deliberate practice. Deliberate practice is not just more screen time. It's targeted, intentional, feedback-driven work focused on your weakest areas. Think of how an Olympic sprinter trains. They don't just run 100 meters over and over hoping to get faster. They break it down. Start technique, acceleration phase, stride mechanics, finish drive. Each part is drilled separately, measured, refined, and repeated until it's automatic. I worked with a trader, let's call her Lisa, who constantly missed breakouts. She'd see the move forming but hesitate, waiting for more confirmation. By the time she entered, the trade was halfway over. Instead of just telling herself, "I need to be faster," she dedicated 1 week to nothing but breakout setups. She studied charts of breakouts for hours. She marked the exact price levels where she should have entered. She replayed market sessions, pausing right before the breakout, and practiced clicking buy in simulation. After a week, her hesitation was gone, because she'd trained that exact decision over and over until it became second nature. 3 rules of deliberate practice. 1. Focus on one skill at a time. Pick a single weakness to improve this week. Trade entries, exits, stop-loss placement, patience, risk sizing. Don't try to fix everything at once. 2. Get measurable feedback. Track results for that one skill only. If you're working on exits, ignore everything else and measure. Did I stick to my planned exit? Did I exit too early? Too late? 3. Push just outside your comfort zone. If the drill feels too easy, you're not growing. If it feels overwhelming, scale it back. Aim for that sweet spot where it's challenging but doable. Practical drill, the focus week. Here's how to run a 1-week deliberate practice cycle. Pick your skill. Choose one specific weakness. Study it. Spend 30 to 60 minutes outside market hours reviewing examples of that skill done right and wrong. Simulate it. Use replay mode or paper trading to practice that skill without risking real money. Apply it live. During market hours, only focus on executing that skill well. Review and score. At the end of the day, give yourself a score out of 10 for how well you executed, not how much you made. The compounding effect. 1 week on entries, 1 week on exits, 1 week on trade selection. After 3 months, you've cycled through a dozen skills, each one sharpened and battle-tested. This is how elite performance is built, not in giant leaps, but in small, focused gains that compound over time. Section 6. adapting to market conditions. Picture this. You've done your homework, you've marked your levels, you've visualized your setups, and then the market opens, and nothing behaves like you expected. Instead of trending like your overnight analysis suggested, it's chopping sideways in a tight range. Or maybe you prepared for a quiet day, and it turns into a runaway breakout within the first 15 minutes. This is the market's favorite trick, changing the game after you've suited up to play. Brett Steenbarger says, "The best traders don't cling to being right. They adapt to being profitable." It's not about predicting the market perfectly. It's about recognizing, as quickly as possible, that the market you prepared for isn't the market you're trading right now, and then switching strategies without hesitation. I remember coaching a trader named Mark. He had a killer trend-following system. On strong trend days, he was a machine, consistent, disciplined, deadly accurate. But the problem came when the market didn't trend. He'd wait for the move that never came, watch opportunity after opportunity slip by, and then take a frustrated trade just to do something. By the end of the day, he wasn't just missing profits. He was bleeding capital because he couldn't break from the plan he thought would happen. The adaptable mindset. The adaptable trader thinks like a chess master. In chess, you don't just plan your next move. You prepare for the opponent's possible moves. You have a plan A, but you also have plan B and C ready to go. Steenbarger recommends preparing for at least 3 possible market scenarios each day. 1. Trending day. Price moves cleanly in one direction. 2. Choppy range day. Price oscillates between support and resistance. 3. Volatile breakout day. Sharp moves with fast reversals. For each scenario, outline in advance your ideal setups, your risk parameters, your stop trading conditions if the market is too messy. Here's a morning drill you can start tomorrow. Scan the market. Identify overnight moves, news catalysts, and volatility expectations. Write down 3 scenarios. For each, note your setups, position sizing, and stop-loss rules. Set triggers for switching. Decide what will make you abandon Plan A and move to Plan B. Example, if price fails twice to break the morning high and volume is dropping, I switch from trend trades to range scalps. The key here is pre-deciding your responses so you're not improvising under pressure. One of Steenbarger's clients, a futures trader, mastered this approach. He never went into the day expecting to be right. Instead, his goal was to be aligned. Within the first 30 minutes, he'd know which of his 3 scenarios was playing out, and he'd commit to that playbook for the rest of the day. The result? Consistency. Not because he predicted the market perfectly, but because he never fought it. Adaptation isn't just a skill, it's a mindset. Rigid traders protect their ego. Adaptive traders protect their capital. The market doesn't care about your opinion. It rewards the trader who can read the present moment and act on it without hesitation. Write this where you can see it. Trade what's happening, not what you hoped would happen. Now, here's the reality. Adapting to the market takes energy, and lots of it. If your mind and body aren't in peak condition, you won't have the stamina to keep making sharp decisions all day. Section 7. Sustaining motivation and energy. Here's a pattern I've seen destroy more traders than bad strategies. They start with passion, fueled by the thrill of possibility. They wake up early, they grind all day, they live and breathe the markets. For a while it feels unstoppable, but then the losses sting harder. The early mornings feel heavier. The excitement turns into exhaustion. And one day they just stop. Not because they didn't have skill, but because they ran out of fuel. Brett Steenbarger warns that trading is a high-performance activity that demands consistent mental sharpness. That sharpness requires energy, physical, emotional, and mental. You wouldn't expect a marathon runner to train for 6 hours straight every day without rest. But traders burn themselves out all the time because they treat stamina like it's optional. I knew a trader named Anthony. For the first year, he was a machine, in his chair at 6 a.m., studying every tick until the market closed. But after 18 months, his performance dropped. He wasn't slower because his strategy stopped working. He was slower because he stopped working at his best. His diet was terrible. His sleep was short. And every trade felt like a mental wrestling match. He wasn't losing to the market. He was losing to fatigue. The energy equation. Energy is your trading capital you don't see on your account statement. Without it, you can't think clearly, adapt quickly, or execute your plan. Steenbarger highlights 3 critical areas to maintain it. 1. Physical fitness. Regular movement improves blood flow and cognitive function. Even short morning walks can sharpen decision-making. 2. Sleep quality. Fatigue reduces focus, reaction time, and impulse control. A well-rested trader makes better risk decisions. 3. Mental recovery. Hobbies, family time, and social connection recharge your emotional batteries and keep trading from consuming your identity. Practical strategies to sustain motivation. Process goals over profit goals. Instead of, I need to make $500 today, try, I will follow my plan on 100% of my trades today. This way, you can still win the day, even if the market doesn't pay you. Scheduled breaks. Plan micro breaks throughout the session. Step away from the screen, stretch, drink water, let your brain reset. Celebrate small wins. Don't wait for a massive profit to feel good. Celebrate sticking to your stop, executing without hesitation, or walking away when conditions were poor. These are the wins that build longevity. One of Steenbarger's prop firm traders treated his schedule like an athlete's. He traded hard in the morning, took a long lunch away from screens, and reviewed charts in the afternoon without placing trades unless conditions were perfect. He didn't trade the most hours, but he traded his best hours. That's why he lasted year after year, while others burned out. Motivation isn't about hype or willpower. It's about setting up your daily routine so you naturally have the energy to perform. If you protect your energy, your motivation will take care of itself. Write this down. Energy is my edge. Because no matter how good your strategy is, you can't execute it at a high level if you're running on empty. Section 8. Creating a personal trading development plan. Here's why most traders stay stuck for years. They learn something new, get excited, maybe apply it for a few days, and then drift back to old habits. Without a structure, a step-by-step plan to measure, adjust, and repeat, knowledge becomes entertainment instead of transformation. Brett Steenbarger's coaching always ends with one question. What's your development plan? Because without it, you're just reacting to the market instead of building yourself into the trader who can dominate it. A trading development plan is like a training program for an athlete. It's not about chasing profits. It's about building the skills, mindset, and habits that produce profits consistently. The best plans are short enough to stay focused, but long enough to see real change. That's why we'll build a 90-day cycle. I once worked with a swing trader named Kevin. He was inconsistent, profitable for 2 weeks, then giving it all back in 2 bad days. We built a 90-day development plan with clear focus areas and weekly reviews. By the end of those 3 months, he wasn't just more disciplined. His equity curve was smoother, his confidence higher, and his average drawdown cut in half. Not because the market changed, but because he changed. The 4 pillars of your 90-day plan. 1. Awareness. Daily journaling and emotional tracking. Each day, right? Mental state before trading. Emotional reactions to trades. Key lessons for tomorrow. 2nd, regulation. Embed your pre-trade breathing resets and post-loss recovery routines. This keeps emotions from hijacking your execution. Third, deliberate practice. Every week, focus on one skill: entries, exits, patience, risk sizing, or adapting mid-trade. Review your performance on that single skill at week's end. 4. Adaptation. Start each day with scenario planning: trending, choppy, or breakout. Have a mini playbook for each, so you're never unprepared. Weekly review structure. Every Friday after the market closes, 1. Review your journal and score each day's execution, not just results. 2. Look for patterns. Did certain emotions keep showing up? Did certain setups perform better? 3. Choose your focus skill for the coming week. 4. Adjust risk or trade frequency if needed. The compounding effect. Here's the magic of this plan. After one cycle, you've gone deep on 12 different skill areas. After 4 cycles in a year, you've refined and re-refined each skill multiple times. That's how you build mastery, layer by layer, review by review. Write this somewhere visible. The plan builds the trader, because the trader you want to become is built in daily reps, not random breakthroughs. So here's my challenge. Don't just watch this video and feel motivated. Take 15 minutes right now to write the first draft of your 90-day plan. Pick your first skill to improve. Decide your daily routine. Commit to a weekly review. The next 90 days are going to pass anyway. The question is, will you be the same trader at the end of them, or a better one? Because in trading, the edge isn't just in the charts, it's in you. And now, you have the blueprint to sharpen it.